Democrats are working together on this.
Yes.
Very interesting.
Yes.
Well, the panel's done a great job, and now it's time for you to step to the microphone and ask some questions.
I'm from the Washington State Department of Insurance Consumer Advocacy Program, and I will tell you that we get a lot of complaints from long-term care policyholders. And I bet you know what most of them are happy about these days. They aren't happy about huge rate increases that have occurred over the past few years on policies that they bought when they were a lot younger, and disclosure provisions were a lot weaker, and most of them did not have any concept that their rates could go up. So what is happening to these policyholders is they're being forced out of their policies, or they're being forced to accept non-forfeiture provisions or reduced benefits. It is a huge problem, and they are really, really angry. Now, the other part of this deal is because this is going on, and a lot of the insurance companies are finding out that they really can't afford to cover long-term care anymore, is that they're pulling out of the market. They're not selling individual policies. I think Genworth, for a matter of fact, recently pulled out of the individual sales market in Washington State.
No, we didn't.
You did not? That's wrong?
That's wrong.
Okay, I appreciate the correction. But we are seeing this going on. And so the question is really, what is the future of long-term care insurance policies?
Can I?
I bought my policy when I was in my early 40s, and over the past 4 years, my rate has increased twice to the point where if I reach the age 70, I won't be able to afford it. I'll have to drop it, and I paid into it all these years.
Can I make an analogy, which is, can you if you want to buy a car, you go out and you see what cars are available, what's the new features, right, and what the prices are going to be, and you buy the car. I don't think anybody would sign a contract to say, I am going to pay for the next 20 years or 30 years to buy a car in 30 years. And I'm going to be stuck with today's features. I don't care how this car industry evolves, right? I'm going to be stuck with today's features. And if I can't afford the last couple payments, I'm screwed. I lose the whole value of the car. So, I'm sure there are companies that are trying to address this issue, but I think that's the perception for a lot of people who are consumers about long-term care insurance, and that's sort of the challenge that the industry faces.
It's all yours.
Thank you. So I feel your pain. I read all of the complaint letters that we get around long-term care rate increases. I myself have had my own long-term care insurance policy rate increased significantly. And the only thing that I can say is that, first off, Genworth is very committed to this product because we feel that it's important and that it addresses a huge consumer need, even if consumers don't realize that they need it. The other issue, of course, is that some of the benefits that were sold in the past, perhaps are not as beneficial now. Lifetime benefits, we're finding that very few people exceed their benefit levels and max out their policy. So being forced into taking a lower benefit perhaps isn't as bad for the consumer as they feel it is. A lot of times because they were very well sold on the policy benefits that they purchased. So it's not easy. We don't like raising rates. However, I think that part of our challenge is that we were trying to place a bet for a 30 to 35 to 40-year horizon that didn't contemplate all of the things that we've now learned about consumer behavior and the policies that we wrote. So I think that it's important to keep the perspective that this is still a very valuable product. No one who has a claim with us complains, for the most part, because we pay all of them. So it's challenging. I'm not going to tell you that it's not. But we're committed to finding a better way of handling long-term care insurance. We would love to see an environment where A planned rate increase is incorporated into the policy design so that there aren't any surprises and that it makes sense for consumers. And we would love to not be rate increasing people that are extremely elderly. So those are all challenges in front of us. I don't know if you want to say anything more from your perspective.
Sure. Beth kind of broached the subject of LTC pricing assumptions, and I will say that the one assumption that has led to a lot of rate increases is the lapse assumption. Since long-term care insurance has been around, lapse rates have come down a great deal, and that is a change in policyholder behavior that was not anticipated in the original pricing. And lapses are very material because that means more people are in force in order to claim. So in the original pricing, somebody thought that lapse rates would look more like they had in the most recent past, and they continue to come down. For long-term care also, mortality functions a lot like lapses in that it is a decrement to the in-force policies that could claim. It is not a benefit trigger like in life insurance. We have also seen mortality improvement in the in-force long-term care. Long-term care pricing is very difficult. The liabilities are very long. You cannot buy an asset as long as an LTC liability. And during that period of time that the long-term care policy is in force, whether it be lapses or other assumptions, the assumptions are going to develop differently than it's priced for. That's one thing. It will be different. It could be adverse, it could be favorable, but it will be different. As to the question that was, what is the future, I think the long-term care insurance has a long future because even with the rate increases that have happened in the recent, say, 10 years, long-term care policies really do persist. People that bought the coverage do value the coverage. Something that's been in place for some years is in the issuance of the policy, we have to determine that this is an appropriate sale. And I think the industry has done a good job in selling to people who are appropriate, and those people hang on to their policies.
Yes, ma'am.
Thank you. Yvonne Hunter from Arizona. The Washington person beat me to the mic on the real issues, but I just want, in the interest of piling on, I want to add, you talked about the fact that you had difficulty selling this product to the millennials. And the millennials are watching their parents who have bought long-term care products, or even their grandparents who bought long-term care products. And in the interest of the savings and loan scandals, Enron, the recession, this is one more thing that looks like a scam. And you have, from your perspective, a huge burden to try to sell people to the notion that this is not only affordable, but it's practical. And if we're talking about folks that have $75,000 a month in income and up, that's when they're working. The long-term care benefit still kicks in when they're not working and the premiums are going up. There's no other product that you buy where you have that experience. And so you do have the situation where people thought it was affordable when they're working. What happens when they're not working and they get that 200% increase? I don't know how you sell that to a consumer, but from my office's perspective, Arizona Department of Insurance, Consumer Affairs Division, we get those phone calls, and people are saying, I'm in the least likely position now to afford this 200% increase. What do I do? What are my options? So I just want to make that statement clear that you do have a huge burden to try to sell this product in light of the war stories that are raging out there in terms of what's happening with consumers. In terms of the combo product with the annuities, I was still concerned about one of the issues and questions that my office gets periodically are people who bought these products and for the annuity, the combo situation, and they are already 75, 80 years old, and there's a question as to the suitability of these products. And I was curious, what kinds of things do you have in place to counteract this argument of suitability?
So I will say that regarding the suitability of the annuity sale, I think the regulations are just catching up with the product. I can only speak to how Genworth looks at it, and because we've been a long-term care insurance carrier for so long, we tend to be more conservative in terms of how we look at suitability, particularly around combination products. So we tend to err on the side of doing as much as possible on the long-term care side and adopting those types of disclosures around suitability versus the carriers that have been, and this is not to slam any carrier at all, but carriers who have been more aligned around the annuity business and have not been in the long-term care arena. The tendency is to perhaps not have as full a disclosure as one might like. But again, I think the regulations are catching up with that. But I agree with you. At the moment, there is some unevenness in terms of the disclosures that are available to consumers, and particularly, I mean, that is a senior sale. So, disclosure is important in any sale, but particularly for people in that age cohort. So I'm sure you do have consumers calling you who are not quite sure which way to jump.
Do you have other questions?
I'm Hannah Ruiz, President of Concierge Care. We have 5 locations across the country. One thing I've seen, we kept numbers in preparing to come here. We helped 712 families do care coordination who had long-term care policies, which I am a big fan of. But on that, I've seen that 2 national startups are helping with the claims process because they can be so difficult. Many times that claims process falls on that caregiver to provide the help with. On average, a claims process is costing about 22 hours of that person's work in the initial process. And so these companies, out of 712 people that we worked with, 400 of them went to these companies and paid between $3,000 to $5,000 to start their long-term care insurance claim. I wonder if you'd speak to, is this something that you think will become more of an issue? Do you think the insurance companies themselves will help with that clear kind of claims process? The second part of that is, we just did a large CEU series at the World War I Museum with 114 insurance salespeople, and most of them, like you said, they're new to the industry, and this was not their background. So I definitely speak to that sort of loss of insurance salesmen and saleswomen who can, provide the information when someone needs the policy. So I just wanted to ask what you see in that claims process.
So, I can only speak for my own company. I don't know how other companies are handling it. But I know that at Genworth, we and we have care management benefits in the claim, in the policy itself. And we actually will send it's a home care situation. We will send the care manager to the home with the claim forms to help the family through that claim form process, recognizing that it can be challenging to put all the documentation together. It's because there aren't a lot of long-term care claims. Physicians, offices are burdened already. They don't want to, supply records to yet another insurance company. One of the things that we're trying to do is to do things more online and to allow the claims process to happen online. Now, obviously, the cohort of individuals that are actually on claim they are not online. But most of the time, the person that we're dealing with at time of claim is not the policyholder, it's their family member. So we are trying to make that less burdensome. HIPAA gives us a few challenges, around who we can disclose to and who we can't disclose to and what we can disclose. So again, it's It's a regulatory challenge to some extent, but it is our intent at claim time, because we have and we do pay $1.5 million every single day in claims. We try to make it as easy as we can. So, and I have seen those companies, and I just personally was horrified to think that it's become that difficult to file a long-term care claim.
Yeah, can I just chime in? I don't want to steal thunder from tomorrow's panel, but I'm just struck by this. There was an OECD report on healthcare spending that talked about why we spend so much more than the other industrialized countries. And one of the clear reasons is prices. But the other reason they cited was the administrative cost associated with insurance. And this is a perfect example. There's whole companies there's a whole industry about this that's adding to the cost of health care without actually providing any more health care. And so I just, this is like symptomatic of what's wrong in some ways with our health care system.
Any other questions?
Anna Rappaport again. This panel really overlaps in some interesting ways with what I'm going to talk about tomorrow, but I just wanted to point out that in the handout package, the actuarial profession had a call for papers last year on retirement security and long-term care, and the list of the papers is in the handout package. I wanted to raise a different issue because I've got people here that are regulating insurance, something that you all, I don't think I heard you talk about, and that's continuing care retirement communities, which cover only a very small part of the population, but offer a different form of long-term care insurance. From what I understand, in many states, these communities may not be very well regulated at all. Sometimes they're regulated by insurance, sometimes by health departments, and people are putting up large amounts of money that aren't well regulated. So I have a kind of challenge. It's not so much a question to the panel, it's a challenge to those of you in the regulatory business that maybe you should be taking a closer look at these communities and how they're regulated. I'm very concerned because of a personal experience I was aware of with a family member where the sales pitch and the contract it was horrifying. We're completely out of step, and there's just a lot of space there for all of you. I wanted to point out one thing about the research, and then I do have a question for the panel. You all talked about how people weren't very good long-term care planners. The research that we've been doing in the Society of Actuaries, take out the word long-term care. This would be true for any kind of financial product. We've actually right now are doing another round of focus groups that I sat in on some last week with 15-year-plus retirees. And just like the groups we did 2 years ago with recent retirees, the financial planning is a lot more around shorter-term cash flow, and that's where the action is. So that and the fact that it's very hard to get people to voluntarily purchase products, I'm thinking that a totally voluntary private sector solution won't do the whole job. I'm interested in reactions to that. But I didn't also think I heard about the employer, and more employers were in than are today, but I'm very curious about what you think about employers at the work site encouraging this, providing education, encouraging the product, and trying to get people to buy through some sorts of group arrangements. I think many of us think that there's greater hope for, and this is not a long-term care discussion, this is a financial, any kind of long-term risk protection. People buy fire insurance, but they're mandated to buy it by their mortgagees. And I have a last question. Do you all have any comments about complexity? For myself even, who am not an expert, and I'm going to make the same comment about annuity products and long-term care products. There's so many variations that give more choice, but I can't understand the words. And so those are several questions for you all to maybe have some comments on.
So I'll take a couple of them, and I'm sure you guys all have comments as well. CCRCs, I agree, they can be wonderful. or they can be not wonderful. I think that, way back when, Unum tried to do some work with CCRCs, and again, sort of the same scenario that we've all experienced in the long-term care assumptions is that if it's a CCRC, it's got a finite amount of space, and as people age, they're not going anywhere. And so calculating the amount of service and what you should charge for that service is very difficult. And I think what's interesting about CCRCs is that even when they're regulated by the Department of Insurance, I'm from Virginia, and they're regulated by the Department of Insurance in Virginia, so they're required to hold a certain amount of reserves. They have escalation clauses in all of their contracts, and nobody even turns a hair at 15 and 20% every 2 to 3 year escalation clauses automatically with no documentation, no filing, nothing for a CCRC contract, which is fascinating because I can't see the difference between that and a long-term care insurance policy. So that's that piece. Group insurance, right now, Genworth is the only carrier that is actually in the true group market, the employer space. We're very bullish on it, needless to say. There are other carriers that are selling individual products, on an employer basis. And we feel that that is an avenue for growth, for sales, and also a great way to help people understand their long-term care exposure. And I'm losing the third question that you asked.
Complexity?
Oh, complexity. Oh, yes. Again, I would love to make it much simpler. I had the occasion, I know that the disclosure wasn't as worthwhile in some of those older products, but now I think we've got so much disclosure that it's turned into gibberish. And I know that the NAIC has a work group that is trying to revisit all of the disclosures in the model, and I think that is a wonderful effort, and we're very pleased to see it. It definitely is way too complex.
So I just want to make a couple of comments. One is that, it's interesting. University of Michigan does this health and retirement survey. It's one of the better longitudinal surveys out there. And I remember some research that Josh Wiener did on Medicaid use among that population, and where you really started to see middle-class people starting to use long-term Medicaid was when they were hitting their 90s. And, they just simply run out of money. And so I think the question in the context of these CCRCs, in addition, to what Beth is saying, is what happens with Medicaid in these places? If you can live long enough, you're going to be running out of money, and you say you have to go on Medicaid. What happens to you if you're in a CCRC? I think there's some tension and some unresolved policy issues about whether you can stay there. And housing is really, in general, like one of the things about long-term care that people have not figured out. We're all focused on sort of what happens after hospitalizations and nursing home care versus home and community-based care, but the housing is really sort of one of the keys to making a long-term care system work. And then just the other thing I'd add is on complexity. I think if we look at Part D, the Medicare program, the drug benefit, that's so much less complicated. The issues are so much less, and yet it's still boggling to most seniors. Most seniors do not buy the product that's the least expensive product because it's hard to figure out. One interesting, I don't know if at some point maybe the federal government could have a program like they have Plan Finder to help people figure out what plan they should get. Most people don't use it, but you put in your drugs and you see what plan in your area, you put in your zip code, and then you see what plan is less expensive. Maybe they can have some sort of simple financial instrument explainer, right? So, because these products are so complex, and the audience is not really well prepared to understand it.
Well, I've had, people that are, Anna Rappaport is very smart, and she can't understand it. So, it's ridiculous. And I'm not saying that facetiously at all. I've had, very brilliant college professors tell me, I got one of your brochures and I couldn't understand what in the world it was trying to tell me about long-term care insurance. And so I think that there is generally, around insurance, difficulty in understanding because we have developed this whole arcane language and vocabulary. But, to Lee's point, I think technology could feasibly help us, with some of this issue because we can, put in, if somebody needs help on something, they can click the button and get the help that they need. But unfortunately, we're not as, in terms of, the general population, most people still aren't using technology to the extent that it could be used, even people that are the age of folks in this room. So I think it's a combination of trying to simplify the requirements. It's, trying to find techniques that people understand, and then it's just continuing education.
Warren, did you want to say something?
I would agree that understandability is an important criteria in evaluating a long-term care program, particularly one that is voluntary. So if a program is more understandable, you will get a higher participation rate and less adverse selection. And then the opposite is also true. If you look at it in terms of complexity, you'll get a lower participation rate. People just throw up their hands and say, I don't understand this, and only the people who want to select against the program would participate.
Let me close this out with a couple of notes. One is a problem that's come up, but I think is easily solvable. Sometimes when you're 93, you're not that good at handling your bills, so you may forget to pay your long-term care insurance premium, and then it gets canceled. I've seen cases where, and I don't know if this is the insurance company or the state, a simple rule would be the insurance company has to send a notice of premium to someone else in the family, namely the adult child, so that if the 93-year-old forgets to pay the premium, the kid at 60 will remember to pay the premium. So that's one thing. The other thing is I wanted to put on a commercial. Basically, I'm a reporter. This is what I do with my website, helpwithaging.com. So I invite the representative from Washington and from Arizona, come up, give me your business card, and get one of mine, because I think what you're talking about is a good story. And also the representative from Concierge Care, because it is this is a big story that people have to pay $3,000 to get help to fill out their long-term care insurance policies. And anything else you think would be a good story, here's my card. So on that note, let me thank the panel for doing a great job, and thank you for your good questions.